So government thought that, okay, if we kind of replace this physical gold with a paper and throw in a small return to 2.5%, they promise that we'll give you 2.5% interest also. And if you buy 10 lakh rupees worth of gold bonds, we will return the equivalent value of gold to you on maturity. And so scheme had very good intentions. The amount of imports that India is doing, therefore have more trade balance, which would have made our Reserve Bank's life a little easier. But none of this worked actually. So it was a well-intentioned scheme which has gone completely sour, because the mistake that the government did in its calculation was that they assumed that gold price will remain stable, and it has not. And so gold price has gone up some 3 times, and now you have to pay 3 times more, and there's no gold that the government bought to back these SGBs. If they had bought the gold to back the sovereign gold bonds, the whole purpose of the scheme would have been lost. So instead of I importing, the government is importing on my behalf, and it's also giving me 2.5% for safekeeping. So it would have lost. Now government is looking at a big gaping hole in their balance sheet, because they will have to make good the promise, and which means there is a fiscal loss. To that extent, a few lakh crores is going to go in maturities of these bonds whenever they mature. Gold bonds, they have stopped issuing that. But whoever invested has been very lucky. They got 2.5% tax-free, and then all this appreciation tax-free. And so they don't have to pay any taxes, and they have tripled their money.